Hello and good day. Today we are from Group 15 USM VEXTRA Tax Services Sdn Berhad will present our assignment. Before that, I would like to introduce our group members. First one is Nur Zahira Idina, Nur Adana Sofia, Sri Ashwin Raj, Yagus Shilin, and Wan Nur Christina Uzma. First of all, I would like to talk about part A, which is the scenario. We will first introduce our client's background. His name was Fahmi Nizam. He was 49-year-old Malaysian citizen and tax resident. He's currently working as a head of technical and maintenance in Sheffield Corp, Malaysia since 2015 and staying in Pahang. Fahmi Nizam was married to Shazana, aged 43 years old, a full-time housewife. They have 3 children together. Their eldest son was Fatah, who is 22 years old and currently studying at International Islamic University Malaysia and has had a permanent disability since childhood. Fatah gets tax relief. Their second daughter was Fazura, 18-year-old, is currently studying in Pahang Matriculation College for a science course. Their youngest daughter, Fatima, who is 4 years old, currently attending childcare at Burmas Jaya Childcare Centre. These are Fahmi Nizam payslip for 1 month where there was no increase in his pay and in the employees' provident fund and social security contributions rates involved throughout the year. The company are Sheffield Corp Malaysia from Department Head of Technical and Maintenance for the date December 2024. Fahmi Nizam earned 12,000 ringgit Malaysia a month, and the deduction are employee EPF for 11%, which is 1,320, and SOCSO 0.5%, 60 ringgit. Total deductions are 1,380. Thus, net pay for Fahmi Nizam are 10,620 ringgit Malaysia per month. Next, I would like to talk about this scenario. A bonus of 4,500 ringgit was awarded to Fahmi Nizam at the end of 2024. The employer gave Fahmi Nizam a 100 ringgit gift voucher for Zalora for his birthday. Fahmi's employer provides him with a monthly allowance of 400 ringgit for a driver. Fahmi also provided with a company car, which is Produk Atiba, costing 70,600 ringgit Malaysia, and uses the car the whole year, including petrol. A full medical expenses of 1 is provided by the employer to him. Fahmi withdrawal and unapproved provident fund, employees contribution 10,000 ringgit and 25,000 ringgit. He also received a meal allowance from the employer that cost 250 per annual. A bungalow was provided by the employer to him from 1st April 2017 with annual relatable value of 54,000 ringgit as determined by the local authority, and it came with fully furnished living accommodation with air conditioning, curtains, carpets, more kitchen equipment, crockery, utensils, and appliances which cost 1,000 ringgit for the year. Fahmi Nizam was forced to resign from his position due to permanent health issues that limited his ability to work. As compensation for the loss of his job, Sheffield Corp Malaysia paid him 60,000 ringgit in December 2024. This amount was provided in recognition of his contribution and to help him transition. These are the details of Fahmi Nizam's other income for the year 2024. He self-produced and published his first song and received royalty income of 30,000 ringgit Malaysia. His residential property in A23 is provided as below. He received rental income for 18,000 ringgit Malaysia and deposit 4,500 ringgit. He deposit refund to ex-tenant 4,500 ringgit. He replaced the damaged bathroom tiles, cost him 2,500 ringgit. Assessment 3,000 ringgit and interest on loan is 4,000 ringgit. He paid 14,000 ringgit and for his net rental are 8,500 ringgit. He also placed 200,000 in a fixed deposit with CIMB Berhad from June 1 to December 31, 2024. From this investment, he earned 4,000 ringgit in interest income from June to December. He received 500 ringgit in dividend income from his investment shares of Mr. DIY Group Berhad. Fahmi invested part of his retrenchment compensation in an annuity plan which pays him 36,000 ringgit Malaysia annually. Fahmi got 5,000 ringgit in interest by lending to his relative's firm, Setia Maju Sendirian Berhad. Fahmi earned a 1,000 ringgit commission from his colleagues for aiding him in locating a replacement rental for his home. Next, Fahmi Nizam expenditure that incurred for during the year 2024. Fahmi incurred 4,500 ringgit Malaysia for his parents' medical treatment and 3,000 ringgit for his wife's parents' treatment. Fahmi completed a medical checkup and medicines of 4,500 ringgit for Fatah, his disabled child. Fahmi deposited 4,800 ringgit each into SSPN accounts for both of his children who are students at IIUM and KMPH. Fahmi purchased a laptop worth 3,500 ringgit Malaysia for Fatah, while his wife purchased a Samsung tablet worth 2,069 ringgit Malaysia for herself. During the year, 450 ringgit childcare fees is spent per month for his youngest daughter Fatima. Fahmi opted to pursue his education in Master in Technical Industrial at Open University Malaysia for 20,000 ringgit. Fahmi purchased medical insurance premiums for 1,100 ringgit Malaysia for each of their children. He donated 2,500 ringgit Malaysia in cash to an approved institution. He paid 500 ringgit for purchasing a badminton racket. Fahmi contributed 4,000 ringgit Malaysia to a private retirement scheme approved by the relevant authority through CIMB Berhad.
Good day everyone. Today, Yagushilan and I will walk you through the detailed calculation of income tax payable for Fahmi Nizam for the year of assessment 2024. This presentation is divided into sections, referencing the specific provision of the tax framework. By the end, you will have a clear understanding on how the final tax amount is computed. Let's begin. Firstly, Section 1, Employment Income under Section 4B. We start with Fahmi Nizam's employment income, which is categorized into different subsections under 13.1. Section 13.1A, Salary and Benefit. Fahmi's monthly salary is Rm 12,000 ringgit, totaling Rm 144,000 annually. The bonus is 4,500 ringgit and gift voucher is 100 ringgit. Adding these amounts give a subtotal of 148,600 ringgit. Section 13.1b, Benefit in Kind. Fahmi received various employment benefit which are driver's allowance 400 per month, totaling 4,800 annually. Car benefit 3,600, petrol benefit 1,200, medical expenses 1,000, and finally fully furnished accommodation 280 per month, totaling 3,360 annually. The total of benefits in kind is 13,960. For the Section 13.1c, Value of Living Accommodation, this is calculated as the lower of defined value 54,000 and another one 30% times by 148,600 ringgit, which is salary plus bonus. So you will get 44,580. The lower value of 44,580 is used. Firstly, Section 1, Employment Income under Section 4B. We start with Fahmi Nizam's employment income, which is categorized into different subsections under 13.1. Section 13.1A, Salary and Benefit. Fahmi's monthly salary is Rm 12,000 ringgit, totaling Rm 144,000 annually. The bonus is 4,500 ringgit and gift voucher is 100 ringgit. Adding these amounts give a subtotal of 148,600 ringgit. Section 13.1b, Benefit in Kind. Fahmi received various employment benefit which are driver's allowance 400 per month, totaling 4,800 annually. Car benefit 3,600, petrol benefit 1,200, medical expenses 1,000, and finally fully furnished accommodation 280 per month, totaling 3,360 annually. The total of benefits in kind is 13,960. For the royalty income, Fahmi earned 30,000 ringgit from a published song. After an exemption of 20,000, the net royalty income is 10,000 ringgit. Together, the gross rental and royalty income is 18,500 ringgit. Next, let us move to the Section 4 Commission and Other Income. Section 4F. Fahmi also earned 1,000 ringgit in commission, bringing to the total aggregate income to 256,640 ringgit.
Good day everyone, I'm Yagushilan. Now I will continue section 5, which is deduction and relief. Next, we apply deduction and relief. First one, donation to the approved institution RM 2,500 capped at 10% of aggregate income. The second one is personal reliefs. These total RM 77,350 and includes self-relief RM 9,000, spouse joint assessment RM 4,000, medical treatment for parents RM 4,500, medical checkup for Fatah, which is a disabled child, RM 4,500, SSPN deposit for children's education RM 8,000, laptop purchase RM 2,500, child care fee RM 3,000, pursuing a degree and masters RM 7,000, medical insurance for children, which is 3,000, private retirement scheme RM 3,000, EPF contribution RM 4,000, child relief for Fatah disabled child RM 14,000, Fazura studying RM 8,000 and Fatima childcare RM 2,000. All this deduction, the chargeable income is RM 176,790. Next, section 6, tax liability. Finally, we calculate the tax liability. Income tax on the first 100,000 we allocated with RM 9,400. The remaining RM 76,790 we should times with 24% and RM 19,197 and 50 cents. This result a total income of tax payable RM 28,597 ringgit and 50 cents. Conclusion: Fahmi Nizam's income tax payable for the year assessment 2024 is RM 28,597 and 50 cents. Through this presentation, I hope you have gained a clear understanding of this calculation. Thanks for your attention.
Next, I'm going to present our tax planning advices towards our client Fahmi Nizam. Firstly, one key opportunity is leveraging zakat payments, which are deductible directly from his taxable income under Malaysian tax law. Zakat contributions to government-approved religious authorities can qualify for a 100% tax rebate from the Inland Revenue Board of Malaysia (LHDN) and will directly reducing his taxable income. Not to forget, to maximize this benefit, Fahmi must ensure his zakat payment are properly documented with official receipts. By integrating zakat into his broader tax strategy, Fahmi actually can fulfill his religious duties while optimizing his tax efficiency. Effective timing of his contributions will help balance financial management and social impact, ensuring compliance with legal requirements and minimizing his tax liability, aligning his spiritual obligations with smart financial planning. Next is donation. Fahmi Nizam can strategically enhance his charitable contribution while lowering his taxable income, as Malaysia's tax regulation allow for deduction on donation up to 10% of his total income. By donating to government-approved institution or organization that align with his values, he can reduce his tax liability while supporting cause he believes in. It is very important that all donations are supported by proper documentation such as official receipts to ensure compliance with tax regulation. Fahmi can make this contribution a regular part of his tax strategy, creating a meaningful connection between his philanthropy and financial planning. By doing so, he not only made a positive impact on society but also optimized his tax benefit, turning charitable giving into both a rewarding personal choice and an effective financial tool.
Other than that, Fahmi can benefit greatly from continuing his education in a number of ways, including significant tax relief and improvements to his professional and personal development. Fahmi is eligible to claim up to 7,000 ringgit per year for approved courses tuition under Malaysia's Income Tax Act 1967. His chargeable income is directly decreased by this tax relief, which lowers his total tax obligation. Fahmi can also claim the 7,000 ringgit relief over several years for long-term courses like a master's or PhD by carefully planning his educational timeline. A 3-year master's program, for instance, might enable him to receive up to 21,000 ringgit in total relief, which would drastically lower his taxable income during that time. By making additional educational investments, Fahmi can improve his credentials and acquire cutting-edge knowledge and abilities pertinent to his line of work. Fahmi can maximize financial efficiency by taking advantage of future tax reliefs on high tax brackets thanks to his increased earnings. Additionally, Fahmi's taxable income can be greatly decreased while preserving the value of the benefits he receives by reorganizing his remuneration package to include more tax-efficient benefits. There are certain benefits in kind (BIK) provided by employers that are fully or partially tax-exempt under Malaysia's Income Tax Act 1967. Fahmi could discuss with his employer about the possibility of including more tax-exempt perks in his package, such as dental benefits like treatments and checkups. This guarantees that he gets important medical assistance without raising his taxable income. Fahmi Nazmi could also opt by transforming taxable benefits into preferentially taxed or non-taxable alternatives as well, like electric vehicle incentives. As part of his benefits package, Fahmi might look into tax-exempt options for electric vehicles (EVs). Certain EV-related benefits, such as charging stations or employer-provided EVs, may be eligible for tax relief or exemptions under Malaysia's environmental tax incentives. This would enable him to support sustainable practices and benefit from transportation with little tax ramification. Last but not least, Fahmi can maximize his tax deductions related to his rental property by keeping detailed records and planning his expenses strategically. He should first ensure that all maintenance expenses associated with the rental property are accurately recorded. This covers any maintenance repairs or improvements required to maintain the property in a condition that makes it rentable. Fahmi can lower the amount of taxable income from the rental property by deducting these costs from his taxes by keeping accurate records. Higher expenses in a year with a high income could lower his total tax liability for that year. So, this strategy could help offset a larger portion of his taxable income. Fahmi might also look into the possibility of funding environmentally friendly or energy efficient improvements for the property. Tax incentives or rebates may be available for some energy efficient upgrades, such as adding solar panels, energy efficient windows, or eco friendly appliances.